In today's video, we're gonna talk all about those scary rises in insurance costs when it comes to investing in oceanfront condos here in Myrtle Beach, South Carolina. Now, if you stay tuned until the very end of the video, I'm gonna cover with you a unit at the Meridian, the resort right back behind me, that's currently projected to profit $15,814.73. Let's get after it right now. Insurance increases. HOA dues are increasing due to rises in insurance cost. Many HOAs don't have the reserves in order to cover the insurance cost increases. Some of these insurance costs have risen as much as 30 to 50%. Because they weren't anticipating this, they didn't have enough reserves in place to cover the insurance cost increases, so they began issuing special assessments and in some cases, increasing HOA dues. Some condominiums were only impacted minimally. For example, Cove, located in Myrtle Beach, South Carolina, only saw an $82 monthly increase in HOA dues due to increased insurance premiums. That's an annual increase of $984. However, other condominiums, for example, Edgewater, located in North Myrtle Beach, South Carolina, experienced a much more significant rise in insurance cost to the tune of as much as $635 increase in HOA dues each month. That is a $7,620 increase annually in HOA fees. Other places like Westwind, located in Myrtle Beach, South Carolina, looked at other more creative measures in order to reduce their overall insurance expenses, like removing various coverages. Now, why are sellers selling? Well, in some instances, it's clear to see an increase in insurance cost. It's definitely impacting people's bottom dollar and their bottom line. Now, in Edgewater Resort, located there in North Myrtle Beach at Barefoot Resort, we saw a surge of owners put their properties on the market. Currently, there are 23 active listings on the market in Edgewater Resort. So how does this impact you as the buyer? Well, you need a solid and professional agent that's going to put the due diligence work in to discover if the HOA has already increased HOA dues due to insurance cost rises, or if they plan on issuing a special assessment, again, due to those insurance cost rises. You don't want to buy a property thinking that you're going to make X amount of money on it, only to find out, 3, 4, 6 months later, oh wow, there's an insurance increase and it's going to hit me on my HOA dues. Again, when the HOA dues are higher or there's a special assessment, it is going to impact your bottom line. This is one of the funnest parts of the video. You waited for it. Here it comes. There's a unit right here behind me at the Meridian, right here in Myrtle Beach, South Carolina, that is not more than $210,000. This unit does have a projected profitability of $15,814.73. Now, let's go through the numbers. That's what you want. Now, basically, the gross rental income projection on this unit is about $30,000 for units here at the Meridian of this type. The property management fee, I've got you using Evolve with a 10% property management fee. That's only $3,000. That brings you to a subtotal of $27,000. You got $30,000 minus $3,000 brings you to a subtotal of $27,000. Now, out of that $27,000, you have to pay taxes, you have to pay insurance, and you're going to have your annual HOA dues. So, your taxes. Based on 2020 taxes, according to the courthouse records, those were $1,113.27. A quick caveat here is, when you make a new purchase, if that purchase price is higher, the assessor is most likely going to be charging you more money on those taxes, so you shouldn't expect an increase on that number. Now, moving right along, your estimated insurance for HO6 is $1,000. That HOA6 insurance, that's going to cover the personal property items that you want to insure in the unit. Again, you're going to have tenants coming in and out of it. It might be a smart move for you. Then finally, your annual HOA dues. You know, obviously your HOA dues are paid monthly. Well, maybe that's not obvious. They can be paid monthly or quarterly, but I've annualized them for you to give you one solid number. That's, you know, whatever the monthly HOA due is times 12. Basically, that's $9,072 in this instance here at the Meridian. Now, when you subtract all your expenses from that subtotal of $27,000 after your property management fees were paid, that brings you to a projected profitability of $15,814.73. Now, one thing that's important to note here, and in my opinion is, you know, that secret information that you want to know, you have to have a property manager that is charging you 10% in order to be profitable if you are financing these properties. Right now, you're probably looking at a 9% interest rate on a condotel, which is what these type properties are classified as in the finance world. They're called condotels. You're looking at a 9% interest. If you're a first-time investor, you're going to pay 25% down, most likely. If you're not a first-time investor, you're probably going to be looking at 20% down. All that said, with your principal and interest added into it, if you don't have an off-site property manager charging you that 10% rate, you are most likely not going to be profitable on the unit. Real quick, guys, I get calls and emails and text messages from people just like you all the time. Don't be a stranger. Give me a call, get in contact with me, and let me help you invest in an oceanfront condo right here in Myrtle Beach, South Carolina. Well, guys, I hope that information was helpful and useful to you. Please hit that like button, hit the subscribe button, share these videos with friends and family on your social media accounts, and please click anywhere on the screen to check out other useful information in our market that's going to help you make an informed decision. And don't be a stranger. Get in contact with me. Give me a call.